globalization has been benefiting Asia a lot in the last few decades. But we should know that it's not only Asia that's benefiting from it. If you think about global economy in the last 10, 20 years, the great moderation, as people call it, a large part of that is actually attributed to globalization. That pushed down the cost, where you can have low inflation but strong growth. So if you take globalization away, it's a lose-lose situation. It's not really just hurting the developing economies or Asian economies. It's actually hurting back the developed economies. So it's not like globalization benefits only Asian economies. If you look at the World Economic Outlook that's just put out by the IMF, they have quite an interesting study that says if you pull in a hypothetical scenario where there is long-term fragmentation between the two blocks in terms of FDI flows, the output loss globally amounts to 2% of the global GDP in the long term. And that's a lot if you think about 2% of global GDP. But that's not only the only loss that's incurring. Think about it. Deglobalization, or any talks of it, is actually very inflationary. At a time when the global central banks are fighting inflation, growth, financial stability, it's actually adding on their burden. It will become almost impossible for them to do their job. One good news about these talks about deglobalization is that it's actually, I think Professor James said it for a while. You actually don't see it in the numbers yet. If you look at the FDI flows or the China-US trade flows, it's not showing in the numbers yet. I think there are several reasons for that. One is that economies of scale in itself is good. Second, it's much easier to think about relocation of supply chains in simple industries like textile. But if you think about more complex industries like automobiles, electronic goods, moving the supply chain completely or even part of that is actually extremely hard. So there's actually a lot more tax than what's happening in reality. And to me, financial decoupling or financial deglobalization is almost impossible. The whole global financial system is so interconnected that you can't just say, hey, that's the Asian FX market and that's the non-Asian FX market. It's impossible. But one less good news about the globalization discussion is that, one, it will still be around us in the next few years, at least the next few years. And secondly, you will see certain relocation, nearshoring, friendshoring of strategic sectors, that's for sure. Whether you're talking about semiconductors, AI, or technology sectors, whether it's the industry themselves or even the financing of it, FDI or loans, it will be affected. And also you might see certain changes in the shape of globalization in that you might see more regional supply chains emerging, producing in the region for the region. That might actually come in time. So what should we collectively do in Asia? I think there are three things. One is that be resilient, because all this geopolitical fragmentation at times might cause very volatile capital flows, very volatile financial market changes, that we just have to make sure that our own financial system has the ability to withstand it. What you can do is basically three things. Keep your buffers very ample in terms of, for example, foreign reserve, in terms of the buffers in the banking system. If you look around Asia, what's happening in US and Europe has not got any spillover to Asia at all. The main reason is that we keep our house in order. The regulatory system is strong, capital buffer is strong, liquidity is strong. So keeping your house in order, be resilient, is important. And the second thing that we should do collectively is be strong. You have to build your house. You have to invest in infrastructure, in talent. And by infrastructure, it's not really just a physical infrastructure. I think there's a lot of talks in the last panel about digitalization. Here, we should be building a lot more digital infrastructure, which is quite lacking in Asia. And we should also build more talents in the higher value add areas like AI, like cloud computing, like advanced manufacturing. It's not really just basic manufacturing. And the third thing that we need to do is to build more friends, get more friends. And this is what Li Tong talked about. The intra-regional, intra-Asian trade and investment has been increasing. But what we are seeing, that one area that is progressing less fast is the intra-Asian service trade. There are still a lot of barriers for service trade. Especially in future, I would imagine that there will be a lot of service trade through digital means. And if we can lower the barriers for that, if we can come up with some sort of digital standard for Asia, that will actually facilitate the intra-Asian flows. Apart from Asia, we should be talking about Middle East, even Latin America, Africa. So we should diversify our trading partners network. So I think these are what we should do: be resilient, be strong, and build your network. Let me start with the role of Hong Kong as international financial center in future. I think you can well predict what I would say. Of course, Hong Kong's role will be even more important in future. Several areas. One is our traditional intermediary role. I think it will be deepened. Hong Kong will continue and to be the most important gateway between China and the world. And as I said, I don't see financial decoupling happening. And I do see continued fund flows, capital flows between China and the world. And when you think about the global investors, in fact, I talked to most of them, they remain extremely interested in Chinese assets. Why? One, China's GDP is now 18% of the global GDP. And the holdings that they have on Chinese assets is more like 3-4%. There's still a long way to go for them to really match the two. And secondly, Chinese assets has almost zero correlation to the traditional assets. So if you are an asset manager, you will know the importance of diversification. So those flows will definitely continue to go in to Chinese capital markets. And if you look at where those flows come into China now, about 2/3 of the stock and bond flows actually comes through Hong Kong, through the stock and bond connects. So that trend will continue. But I think the more important trend in the next few years will be the capital coming out from China. It is beginning. If you look at the Wealth Management Connect, it's two-way. And it's the first time that individual wealth is allowed to come out to buy global wealth products. Where will that happen? It will be through Hong Kong. And same for Bond Connect southbound. It's the first time that institutional investors on the mainland can use their capital to buy global bonds. Again, it's through Hong Kong. So I think the two-way flows will only strengthen in the future, and Hong Kong's traditional intermediary role will only strengthen. There are also two new roles for Hong Kong as well. One is we've always got that second role, which is RMB offshore, the biggest RMB offshore center. But that role, that market will continue to grow, in my belief, quite significantly in the coming years. Because, well, if you look at the use of RMB in the international trade and investment, currently, China's external trade, only about 18% is done in RMB. That's way below any other countries like Europe, US, or even Japan. So the wider use of RMB in trade and probably in investment will almost be a certain trend. We need to build the infrastructure, etc. But with that wider use of RMB, you've got to have a place where you can provide RMB liquidity, or where the trade counterparts of China, after they receive the RMB, they have a place to invest. And that place will be Hong Kong. Two reasons. One is that there could be a preference to invest to the offshore market when there is a perception that there's free flow of capital, there's common law here, people feel a lot more at ease to invest in Hong Kong. And secondly, if you internationalize any currency, there's a price to pay, which is the impact on the capital accounts. If you want to keep the capital accounts partly closed, then you can rely on Hong Kong as the firewall. So I think that role will gradually grow in the next few years. And the third role will be our role in being the Asian voice in the latest financial trends in the world, including technology and ESG. And we need to do that because otherwise, Hong Kong will be more like an Asian financial center or even China's financial center and not a global financial center. We need to be at the forefront of these global trends. And that's one reason why we spend so much effort in developing projects in, for example, central bank digital currency. There's a project, a cross-border payment project using CBDC involving Hong Kong, China, UAE, and Thailand, which is the most progressive CBDC project in the world, not just in Asia. So that's where we want to position Hong Kong. Same for ESG. We talk a lot about the importance of environment, but the main places in Asia that needs transition is China and India. And I would imagine that a lot of these transition financing will happen in Hong Kong. And again, that's why we are so intent on developing the green finance, green bond, blended finance market here. So I thought those will be the roles of Hong Kong. And what do we need to do? A lot, of course. One main thing which I think is important is, if you think about an international financial center, it's about the ecosystem and also the opportunities. In fact, if you think about our ecosystem, it has remained unchanged in the last few years. The common law, the talent pool, the regulatory standard, etc. But what's changed is the perceptions of global investors on Hong Kong. So what we need to do is to change that perception by hosting conferences like this, by telling the Hong Kong story overseas. Of course, we need to upgrade our platforms as well. So the government efforts in creating better frameworks for family office, for virtual assets is very much welcome, and that's important. And we also need to work, again, like I said, on global issues like technology, like ESG, not just on our own, but probably together with the Great Bay Area. And that's something that I think we can further discuss later.